Now, Japan's postal service has made its trading debut in Tokyo. The state-owned company raised $12 billion in the world's biggest public offering this year. Japan Post has $2 trillion in assets and offered up 11% of its shares across its postal, banking and insurance units. So let's get some analysis now from Seijiro Takashita in Japan. He's a professor at the School of Management and Information at the University of Shizuoka. Seijiro, thank you very much for joining us here at TRT World. I just wanted to ask you, what do you make of the share performance? It's done so well.
Yes, it's done so well, as you pointed out, thanks to expectation of their future prospects. Now, they are like a big whale in a small pond, and there are lots of questions that has to be answered. But at the same time, there's a lot of excellent potential, especially if they succeed on privatization process. Then they can be a very good example of the likes of, for example, Japan Tobacco, who was earlier listed from the government.
So investors could make money out of this then, even though so much of it remains in the government hands, if you like.
Yes, that's a very good point. Now, the big question here is, can they take advantage of deregulation to come? But unless they're fully privatized, it'd be very difficult for them to take advantage of their strength. So timing is also very, very crucial. Let's not forget that a lot of regulation still prohibits them from really pouncing on their competitors. So the time factor, I think, is also a very important thing to watch.
And a lot of people, including investors, would think that the time of the post office has been and gone, that it's an old-fashioned institution. What do you make of that?
Well, that is also one of the biggest problems here. Now, let's not forget that this was three-way listing, 2 subsidiaries. And as you pointed out, the parent, the post office side, their profit is very much reliant on the 2 companies which they listed today. So there's a governance problem which a lot of people don't cite for some reason, and that is basically there's a lot of benefit to be involved. But this is a very big question. Now, they can utilize these post offices, which, as you point out, is becoming outdated. They can scrap them and basically be profitable. But again, they currently have an obligation to sustain the operation as a post office. So again, deregulation is a very, very big key to watch for these companies.
A lot of retail investors, ordinary investors, have been very excited by this offering and they've piled in. Do you think it's a risky proposition for them, and is it a good way to boost the economy or not?
Well, I'd say that this is rather a safe investment, considering that, again, this is a Gulliver. It's not a super growth. There's a lot of questions to be answered, but at the same time, I would say it's a fairly safe investment, considering its positioning, especially for the likes of post-bank and post-insurance side. But again, as you pointed out earlier, the parent, the post side, what happens if these 2 subsidiaries become independent? That really remains to be still a very big question to be answered.
Okay, Dr. Seijiro Takashita joining us from Japan. Thank you very much.